Alrighty guys, listen up. So we're going to break down the indexes in this video and go over the CPI data, what the heck is going on right now in the economy, all that good stuff. So if y'all find value, hit that like button, make sure to subscribe, and guys, do not forget to get up to 16 stocks for Moomoo, each up to $2,000. Use that link down below or go to stocksurfs.com/Moomoo. We'll talk more about that later, and with that being said, guys, I would give you a cheers, but honestly, I have nothing in front of me, but cheers anyway. And with that being said, well, let's dive into the video. So today wasn't necessarily the best day overall for the stock market. I'm not sure if you saw, but all across the board, we sold off. We had the Russell down, which led the way by a long shot, down 2.2%. The NASDAQ went down 0.4%. We had the S&P down about 0.6%. Not the best day for the S&P, as the Dow went down 0.5%, and we had the VIX up almost 4%, which, believe it or not, guys, the VIX is only at 16 points right now, which is pretty surprising considering what's going on, in the globe right now, which we're not going to get too deep into in this video. But I would think the VIX should be at least at 18 or 20 right now, maybe even over 20. But clearly it's not, and maybe in the next couple of days, it will get to that point. We shall see. Maybe, hopefully not. I don't want the VIX to explode, but let's be real. It's totally a possibility at this point. And again, it's pretty surprising. It's only at 16 right now, but it went up 4% on the day today. The VIX just a couple of days ago was at, about a week ago, was at 21. So let's see if it maybe goes back and retests that point. But we have a lot to go over in this video, guys. So let's start off with SPY, which at this point is not looking too good on the 4-hour chart. A couple of days ago, we covered this time frame and we talked about how we were still in a downtrend on this time frame on the 4-hour chart, right? We were making lower highs, over the past couple of months. You guys can see if I pull up the oval tool, we peaked at about 460 back in August. Then we hit about 454.3 back in, when was this? The beginning of September. Then by mid-September, we hit 450, another lower high, and now it looks like, guys, arguably we're putting in another one at about 435 to about 440 as we're, struggling. We're failing to break above the 180 moving average on this time frame, which of course is not good for the bulls. My alert was set at 440, still is set at 440, and we got rejected right at that point. Now we're at 433 as of close on Thursday. So SPY's got to break out of there, which as of now, I'm not too confident that it will. The charts don't look good at all for the bulls. And yes, we're still above the 50 SMA, and you could argue that on the 10-day chart, we're still holding an uptrend, which is true. But listen, man, if we do start falling under 430, the trend breaks on the 30-minute, that's when it's really going to start slipping on the 4-hour chart, in my opinion. Maybe back down to 420, 425 by the looks of it right now. We can see triple Q probably looks very similar. Let me pull that up and see. Yeah, this looks like it's failing at around 370, lower high compared to where it was in September, mid-September, beginning September, and of course where it was back in the middle of July where it hit 387. So we're clearly putting in lower highs right now, which, is pretty obvious. And at the same time, we're holding support at 355 on triple Q, which puts us in a descending triangle, which you guys probably remember. I talked about that a couple of days ago, and that's still the case here as of right now. So let me show you all the Russell, which, my goodness, guys, brace yourselves. Let's just say that. Brace yourselves here for the Russell. This thing looks like it wants to fall right through 1,700 points. And honestly, by the looks of it, man, it's only a matter of time. Look, 1,695 is the low from back in March, it looks like. 1,700 held back in the beginning, middle of March, a little bit in May, April, a couple days ago as well. But it looks like, man, we saw a nice rally off that 1,700 a couple days ago. We got to about almost 1,800. Then we got rejected at a lower high at the 50 SMA. And now we're starting to dump down. We're at 1,734 as of close on Thursday today, which really is not good for the bulls. And the second we break under 1,700 on the Russell, this could start slipping probably down, let's see on this 3-year chart, maybe down to the COVID lows, which is actually, no, that's not the COVID low, is it? What the heck's the COVID low on the Russell? I forget now that I'm thinking about it. Yeah, it was at 1,000 points. Excuse me, guys. I don't think we're going back to 1,000. Maybe we do. I don't know. But 1,500 is reasonable, which on the 3-year chart, it's not the COVID low, but it was the low from the October month of 2020. We hit 1,525. Then we had that huge run to 2,400 for the next year, pretty much until October of 2021. So if we do snap under or break under 17, do not be surprised if this goes to 1,550, 1,600, totally in the cards on the Russell. So let me show you guys what ended up happening today with CPI, which you all probably know at this point. I'm late on this video. Again, I'm on my honeymoon, guys. My priority right now is not videos. It's definitely at the bottom of the priority list, but when I can sneak these videos in, we're going to make the videos. And right now it's about 11 p.m., almost midnight here in Italy. So you guys know this news already, but let me just show you what's going on with the CPI data. And actually, now that I'm looking at it, I don't even have it pulled up myself here. Give me a second here, guys. Make sure to hit that like button, by the way. I appreciate you all for tuning in. As always, actually, now I might have to start a new recording. I'm editing this video anyway, but for some reason OBS is weird, this recording software, so let me actually get right back to you guys. Actually, no, wait a second. Here it is. Never mind. Never mind. So we can see right here, CPI data for the United States, that is, of course. This ended up coming in today. You guys can see if I pull it up here. Core CPI came in at 0.3%, which, of course, this excludes food and energy, and the estimate was 0.3%, and last month core CPI was 0.3%, which you guys can see right here. It measures, again, the change in price of goods and services purchased by consumers, excluding food and energy. So that's 0.3%. Nothing's changed there. That's pretty much what was expected, right, guys? And when it comes to the regular, or the what's it called? The headline CPI number, not the regular CPI number, the headline CPI number, we can see that came in a little bit higher than expected, it looks like. The forecast was 0.3%. Previously, it was 0.6%. You guys remember in what month was that? Geez, August, right? Yeah, August, we had a huge spike in CPI, but now it's declined. It was at 0.4%, even though that was higher than the estimate, which is not good. Maybe that's a reason why the market sold off today. It's still lower than what it was in August, which is really good in my opinion. We want that to trend down. We do not want this to continue going up. And maybe I'll make another video breaking it down a little bit more. Probably not. Again, I'm on my honeymoon now, guys. I'm not really focusing too much on videos right now. But yeah, year over year, it looks like the CPI number's at 3.7%. Of course, that 0.4% number is the monthly number, right, guys? So annualize that. That's 3.7%. And think about it. 3.7% inflation is actually really good compared to what it was whenever that was. 2 years ago, a year and a half ago, when it was at 9-10%. We have seen some serious ground made on the fight against inflation, but the big fear here is, guys, that inflation is going to rear its head back and start ripping again, going right back to where, maybe not right back to where it was, but a lot of the, not a lot, but some people out there, economists, a lot of the time it's the doomsdayers or the perma bears out there, but it's whatever. A lot of them think that we're going to see another round of inflation, which totally is possible. But for me, guys, do I let this really dictate my investing strategy, especially for the long term? Not really. I mean, I'm still doing what I do. I'm still buying the index funds for the long term, the quality individual stocks. I'm still buying some gold here and there, which actually I haven't bought physical gold in quite some time, now that I think about it. But I did want to buy some coins here, maybe towards the end of 2023, maybe early 2024. But either way, I'm still doing, I'm still holding gold, looking to buy more, buying the index funds, doing all that good stuff. So this is not really derailing my strategy at all. But it is something worth looking at. And I do have, I would say, a little bit more in terms of a cash position, I would say, I'm trying to stack up some more cash as well, to have on the sidelines for whatever the heck could be coming around the corner. But that doesn't mean that I'm not investing, right? I'm still investing, still staying invested. I know a lot of people out there with the conflict going on right now, maybe World War III on the horizon. Who knows, right? A lot of people are freaking out. They're like, oh my God, should I sell? Should I get out? And the reality is, guys, just stay invested. At least that's what I'm doing, and that's been, look at the past 20 years, right? All the craziness that's gone on in the world in the last 20 years, from 25 years, let's say 9/11, the Great Financial Crisis, .com bubble, you name it, the pandemic, you name it, right? All the different wars, whatever's going on. If you just stayed invested during that whole time period, if you just kept your money in the stock market, at least the S&P, we're not talking about garbage stocks out there, but let's say the S&P, you would have done very well. You held through 9/11, you held through this, you held through that. A lot of people got scared out, but if you just held through everything, of course, you would have made it to where we are now, and your gains would be insane, right? And of course, a lot of people freak out, they panic sell, and that's where a lot of people go wrong when it comes to investing, especially for the long term. We're not talking about trading here. We're not talking about options, selling calls, or buying puts, or doing anything like that. We're talking about 10, 15, 20, 30 years out. If you have a long-term horizon, you really shouldn't let anything throw you off that course or that path, right? Unless there's really something that is, world ending or something like that. Then at that point, everyone's just going to flood and sell, and we're all screwed anyway. But I don't think that's happening. Who knows, though? I mean, never say never, guys. Knock on wood, right? Knock on wood. So, yeah, that's a quick recap on what ended up happening today. What do you guys think? Let me know your thoughts in the comments. And, yeah, man, pretty interesting day across the board. I would not be surprised here if we did see some more red by the looks of the charts. I don't know. What do you guys think? Let me know in the comments. Hit that like button. Make sure to subscribe. And do not forget to get your free stocks for Moomoo, guys. I'm telling you, this is the best promo right now by far. Use that link down below or go to stocksurfs.com/Moomoo. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks right off the bat. And fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks, each of which could be valued up to $2,000. And it gets even better, guys. Fund your account at least $5,000. On top of those 15 stocks, you also get a free share of either Tesla stock or Google stock, which makes this promo a no-brainer. So get on it. Use that link down below. And of course, that is an affiliate link. It helps out the channel. I appreciate you guys as always. And with that being said, I'll catch you all later.